Payments Podcast from Bottomline Technologies.
We're living in a highly digital, forward-thinking age. As customers, our expectations are changing within the payments landscape, and this has created a new push for innovation within the payment industry, and technology is now responding to these needs. Hello, I'm Rich Williams, host of the Payments Podcast, and today I'm joined by Patrick Newchens, who is the Financial Industry Advisor at Bottomline Technologies. We'll be discussing the market and customer demands in regards to the new future payments business model, as well as how the market is meeting these demands and how technology has responded to it. Hello, Patrick.
Hi, Rich.
So thanks for joining us today. And what we're going to discuss is, of course, a highly relevant topic, particularly now we're already in the sixth of the way through 2020. So I think a good place to begin would be by looking at how market demands are changing in this area.
I would start by saying there's really three different categories of expectations that we are dealing with. One is around speed, the second is around intelligence, and the third is really about digital integration. So if we start with speed, first of all, payments must become faster and become cheaper. This is something that we clearly are observing in domestic payments market, where the expectation is to have real-time and settlement 24/7 and with no fees for the consumer. And to be honest, internationally, the trend is the same. For international payments, that's what the expectation is, even though it is still more difficult to achieve. And there's a number of reasons for that. Banks today are not really 24/7 in their infrastructure capabilities yet. And one big obstacle is compliance screening, which is still having a lot of false positives, which doesn't help if you want to have speed and real-time processing. But all of that can be addressed, as we will see further. The second expectation is around business intelligence, becoming more and more important. And if we phrase it in the context of what we're discussing today, it is about making payments smarter and looking at the context of the payment. What customers and users want is to obtain goods or services, not make payments as such. So any intelligence on what the payment is for will create further efficiencies, value-added opportunities, and will help address the problems that today payments are still a source of friction in many transactions. I think if I take a good example, if you take an Uber car, when you get out of the car, the payment is taken care of. That's what the kind of expectation is that people have today. And then to close on the 3 areas, the third one is integration in digital ecosystems. We see a lot of platform economics, we see network economics taking place. So this is hugely important. And over the next 5 years, it will become even more important moving forward. And this has a number of consequences that are quite interesting, because obviously business innovation in the payments industry is very attractive for players, not only for the incumbents, but there's a lot of new entrants there. Of course, a lot of fintechs, but equally important and not to be ignored, the big techs are there as well. And they will come, they will disrupt, they will innovate, and they will compete with the traditional players. And what we're seeing is a move towards a model that is more cooperative in the financial industry, where diverse business partners interact in these ecosystems in a very efficient way and in real time. Okay, and as a consequence for the traditional banks and solution providers like Bottomline, they must adapt to play and remain competitive in the payments industry space. So they need to focus on simple integration, real-time services, and fast deployment, so they can adapt quickly to changes. And maybe worth mentioning as a final point on this topic is to say that we see that as a result of all these things happening, the distinction between domestic and international payments is actually fading quite fast in a digital world.
Interesting. So you mentioned earlier on there that that the goal of the customer isn't really to make the payment; it's to obtain the service, and the payment is a prerequisite for being provided with that. Yeah. You also mentioned integration into digital ecosystems. So what are the implications for this, for example, with customer data?
Yeah, data is king. Clearly, if we see what's happening in the payments industry, there is so much pressure from all parties involved to have more data, to have better data. So richer, more granular, more structured data with the payments is what this is all about. And it's for regulators, it's important because they want to fight crime and fraud. For payments users, it creates operational efficiencies and cost reduction. If you have a payment that is linked to an invoice, you can reconcile that in a more automated way and have cost efficiencies. For payments processors, the same applies. You can improve automation, again, very important in the context of compliance screening. And equally important, you can extract business intelligence, seek more data on the context of the payment, on the customer, and therefore offer him better and more relevant services. So we could say that payments and transactions are becoming smarter. Data-rich payments provide more transparency, provide more predictability, and that obviously helps in terms of dealing with fees and charges and having the transparency of the parties that are involved there. Also, the end-to-end perspective of the payment in the context is important, because rather than treating a payments message, people want to look at the payments transaction end-to-end and see what it is for in the context of the value chain. And we see that this end-to-end perspective and approach is being evidenced by a number of initiatives. Probably the one worth mentioning in this context, SWIFT's GPI initiative, is really about end-to-end transaction transparency by offering service level agreements and tracking capabilities that facilitate these processes. And of course, as we already said, smarter payments allow for better customer data intelligence, which of course then helps in creating new value-added services, and where the focus is on the service that adds value to the transaction and not just processing the payment.
Yeah, that's a good lead in actually, Patrick. So the market demands and expectations for the payment industry are quite extensive, and that immediacy for access to that rich data and the immediacy of fulfillment of payment is becoming more and more prevalent, which is understandable really, considering the sheer number of potential opportunities that are being generated by these new initiatives. But how exactly is the financial industry addressing the demands of the market, Patrick?
Yes, clearly a lot is happening in this area, but let's maybe focus on three particular areas that really show how the industry is responding to these changing requirements from customers and corporate clients. And there are really the three perspectives that are relevant here: from the regulator's perspective, the markets themselves, and from the standards domain. So if we start with the regulators, basically the response from the regulators has been open banking, which it's being imposed on banks by regulators with the purpose of increasing competition and encouraging innovation. So that is clearly a driver for the whole open banking initiative, not only in the UK but also in Europe and other places. And let's say that this transparency is achieved by enabling seamless access to data through the implementation of APIs. APIs like account to account or like payment initiation that give access to third parties of data that is held by banks on their customers and the transaction. The consequence really is that open banking again opens the door for non-bank entities to enter this financial service space and offer services on top of what the core capabilities of the banks are by providing value-added services on top of these basic capabilities. And that also means that banks' current value add and business model is challenged by these new players, and they need to respond to that. If we look at the financial markets, the response there is really this whole push towards instant payments and real-time process. We've seen it in the UK Faster Payments is there since 2008. They were probably amongst the first to go towards an instant payment infrastructure. In Europe, it started with SEPA in 2015, but now we see schemes emerging in many markets in Europe, including the Nordics, EBA, and more recently Eurosystem TIPS, which is providing those real-time services. And it's not just Europe. It's all over the world. We see it in Australia, China, India, Singapore, the US. I think today over 50 countries probably have instant payments infrastructures. And that is really in response to this need for speed, if you want. And an interesting observation there is that these faster payments are not only an attraction to new players to come and play, but they're also a challenge for some players who are there, like the card companies, who have to respond to that, because they're under pressure with their business models, and what we see as a consequence is that some of the card companies are taking initiatives to position themselves in this financial industry, real-time payment world in a different way. And you see, for instance, MasterCard acquiring Transfast, you see Visa acquiring Earthport. Clearly, that is to reposition themselves, to seize the opportunities and to fight off this faster payment competition. And further repositioning takes place as well, really by acquiring incumbent players in the interbank space. A good example there is MasterCard's acquisition of Vocalink. Okay, so again, dynamics of how things are moving. And then finally, and that leads us to the ISO 2022 perspective, the standardizer space. So for all of this to be possible, something is needed that actually structures it, that standardizes it, and allows for interoperability between the different systems. And for smarter and better payments, ISO 2022 is clearly the messaging standard, the financial messaging standard that is setting the future and catering for all the needs and requirements that these market infrastructures require. As we see today, almost all the instant payments schemes use ISO 2022 as their messaging standard. We see it as being adopted by a lot of the high-value real-time global settlement systems like Fedwire, CHIPS, CHAPS, Target2. SWIFT is in the process of moving its whole correspondent banking messaging space from FIN to ISO 2022 as well. So clearly the push and the general adoption is there, and ISO 2022 is becoming this global standard. And it's not a surprise, because what 2022 does is offer end-to-end common standards for both domestic and international transactions. It allows, as we mentioned before, this need for more data, more granular data, more structured data. That's what ISO 2022 enables. And by doing that, it also creates operational efficiencies that people are looking for in that context. So ISO 2022 is, if you want, some kind of enabling glue in this whole payments space, where we see the evolutions and the interactions between all those domestic and international systems becoming more and more important. We're living in a global world, and that's certainly the case for payments. And ISO 2022 is clearly an enabler for that future.
Okay, so the markets are demanding more data, more richness of data, more speed of settlement. The banks are looking at ways of dealing with fintechs to take care of some of the more tricky pieces for them. And the regulators are building the standardization to actually drive this forwards. If we look specifically at the financial messaging space, how exactly have the demands of the industry gone on to trigger the new technologies to make all this possible?
the financial messaging model that has enabled the payment space has been around for a very long time. And it is something that for many years worked, and there was no need to challenge it, and it catered for all the requirements that were there, and it evolved, and it adapted and adjusted. But in recent years, again, in response to these different demands, market demands that we've been talking about, things are changing because the traditional messaging does not necessarily cater for the requirements of these new environments and the speed and the interaction and all of that. And what we see is that there's some technology innovation taking place and entering this traditional messaging space because this new technology caters for solutions that the traditional messaging cannot necessarily provide. And we're talking about blockchain, we're talking about APIs, in context of open banking, but also outside thereof, and real-time processing clearly are innovations that are taking place. And these are then further supported by new capabilities like big data processing, cloud computing, artificial intelligence, machine learning, etc. So it's actually amazing to see how technology is just catching up to the requirements and the demands of the market, and it's interesting to see how that evolution will take place in the coming years. If we look at each of the three I mentioned in slightly more detail, and let's start with blockchain, it clearly is innovation that works. It provides new approaches for automation, and we see that there's a number of initiatives taking place in the payment space where people are trying out how they can use blockchain in this context. Reconciliation is a good example where we see some proof of concepts and some approaches there. Ripple is a blockchain-based solution for its settlement system. And even though there's some initiatives in payments, I think today it's probably more security space that will benefit from blockchain innovation in the shorter term. Because what we still see with blockchain is that it's not an end-to-end solution. So blockchain is not just going to come in and replace financial messaging because it lacks integration capabilities, it has no interoperability, and therefore it cannot provide an end-to-end solution today in that respect. But clearly it has niche positions within the value chains where it adds value and where it provides innovation and automation that cannot be achieved through messaging. With APIs, it's a bit the same story, if you want. It's basically new ways of accessing data and new services. And one of the great benefits of APIs, of course, is they are real time. So it supports the whole real time processing push that people are expecting. Again, APIs are not the end-to-end solution for everything. And again, APIs today are not really being leveraged to the extent that they could be, because there's still some standardization that is required to make these API approaches more industry efficient and more global. And in a way, ISO 2022 can help there because it does define common sets of business data that will allow interoperability, but there's still a way to go. Maybe the UK open banking is maybe more advanced than other places in the world there. And I would say at this stage, the reason for the success here is because the regulation, the standardization, and the interoperability that is required are addressed, and that gives good results. And then the third technology innovation is all about these real-time processing capabilities that are available, that are fully deployable in financial services. We've seen also that cloud-based computing that obviously supports real-time is becoming more acceptable and more ingrained in this business. So as a result, what we see emerging for financial transactions is what I would call a new end-to-end payments transaction business model. that is not only based on financial messaging anymore. It's a hybrid model based on coexistence of different technologies, each with their own specific purpose and use and benefits. And what we see is a mix of mobile, of APIs, of blockchain, of messaging, and then when we talk messaging, in particular, ISO 2022 based. And as an example, what you could see is, for instance, mobile e-banking APIs are very interesting for payments initiation, whilst blockchain is probably a good technology for clearing and settlement, and the ISO 2022 messaging is probably the best solution for catering for the interbank flow. So we really see this coexistence and this hybrid model evolving as we move forward. And the role of ISO 2022 as an enabler here is quite important, as it allows to adapt and extend the business standards to new technologies. And that then leads to interoperability, reduced complexity and risk mitigation, and overall data consistency end-to-end, which is very important because you can basically make sure that the data that is carried with the message and with the transaction stays there all the time and is not truncated. Hybrid model, I think a good example, if we look at ASX Australia, so it's Australia's new securities clearing and settlement system, is an infrastructure that is basically combining a blockchain node with ISO 2022 messaging to provide a full end-to-end solution in that context. So that's a good example. Now, again, all of this, like everything else we've been talking about, has implications on how solution providers like Bottomline and others need to respond to this to make sure that their value propositions are adapted and are future-oriented in terms of dealing with those technology and solution requirements. And to summarize, what needs to happen is people need to look at their infrastructure and have a strategy that ensures that it deploys API-based architecture in the cloud for speed and caters for the use of microservices to be nimble and flexible and integrate this through the APIs. I think key also is to make sure that, and we mentioned how important data and rich data is, so people need to make sure that when they look at their integration and data extraction and processing processes, that they synchronize among clouds, API, EDI, point-to-point, etc., etc. That's key. I think today instant payments must be part of any core offering, and it's probably for any future offering where it should start. And then if we look at the other end, the legacy systems, there's a lot of legacy infrastructure and platforms out there, and they just cannot necessarily be all replaced with new facilities and new processing, but they need to be enabled with API and instant payment capabilities. So there's a lot of work to be done for some people.
It certainly sounds like it. So we know what the markets are demanding. We know where everyone's hopefully trying to strive towards more standardization and more innovation. Practically speaking, though, Patrick, how will these opportunities and benefits actually be brought to and made available to businesses to actually take advantage of?
As I just explained, I think that financial institutions and their solution providers need to evolve their architecture, and there's a number of reasons we've specifically talked about in that context. But that's not sufficient. I think if they want to leverage the capabilities and the opportunities and benefits they can offer to their customers, they're going to have to rethink their business delivery models as well. And respond in a way that is adapted to how people want to consume services and processes in that context. And what we see is basically, if we assume that real-time payments is going to be a key driver in this context, the real-time payments business model that we see appear is one of rails and overlay. That's what it's referred to. Rails. It's about providing basic functionality at a very low cost on a public good basis. And those are the rails. And then additional functionality is delivered as overlay services, the value add, where then people are willing to pay for those benefits and the support. Their infrastructure needs to consider moving to open platforms which can easily leverage cloud APIs and are going to be more and more data-driven, which then logically leads to digital marketplaces and platforms economics in that context, which are driven by open banking initiatives. But what we see is there's other initiatives as well. There are a number of collaborative partnerships taking place where a number of banks and solution providers share data in a digital ecosystem and create new dynamics by doing that. I think that's a key direction. And given the cloud is becoming so efficient, banking as a service is really there. And it's interesting because it gives fintechs and non-banks access to bank infrastructure and offer services on top of that. So there's a lot of movement and initiative in that respect. And then finally, as I mentioned before, those big takes, as I said, they want to play. They want to be disruptive innovators or innovative disruptors. Basically, again, with Visa Direct and MasterCard Send are two good examples of new initiatives of some players in the real-time payment space. So for me, and to close, I think what's happening in the financial industry, in the payments industry, is extremely exciting. And I think there's a lot of fantastic opportunities for people to provide solutions and be a player in these ecosystems, focusing on innovation, probably also focusing more and more on this collaborative and the partner aspect. And we see more and more evidence that the biggest innovation opportunities are for those who are actually capable of building solutions by combining the different forces that we've just been talking about. So it's an exciting future that I look forward to seeing how it evolves. Thank you.
No, thank you. There are clearly a lot of moving parts there between the regulators, the banks, the non-banking technology providers. And you mentioned sort of strategic partnerships or collaboration there. So for anyone interested to learn more about that, we did cover that topic in some depth a couple of episodes ago on this same podcast. Patrick, thank you very much for joining us today. It was a real pleasure.
Thank you. It was my pleasure.
So unfortunately, that's all we have time for today. We'll be back with some more podcasts very soon. And in the meantime, you can listen to more episodes on all things payments at the touch of a button using your preferred provider. And we'll see you all next time.
Payments Podcast from Bottomline Technologies.